If you thought that Bank of Canada is done with the rate cuts with the recent pause, follow this video along and I will show you that it's exactly the opposite. Record trade deficit supports Bank of Canada cuts in July and September. Canada's merchandise trade deficit ballooned to record 7.1 billion in April, promoting CIBC to say that economic hit supports interest rate cuts at the Bank of Canada's next two meetings. Statistics Canada reported that exports fell 10.8% month over month, the biggest monthly drop since the early days of the pandemic. The pullback was broad-based with declines in 10 out of 11 categories and was mostly felt in auto industry, which dropped nearly 23%. So if you are somebody who works in the auto industry, you need to pay really close attention to this. Exports to the US plunged. The US was at the center of the downturn, with exports south of the border down 16% in April compared to 3% rise to non-US markets. While exports to other countries reached a record high, it wasn't nearly enough to offset the losses with Canada's largest trading partner. Tariffs are going to take their full effect in the second half of 2025, so expect a slower growth ahead. These figures are in line with BMO's expectation for trade to subtract meaningfully from economic growth in the second quarter. This sets the stage very nicely for Bank of Canada to at least give us two more rate cuts in July and in September. And as always, to stay updated on the mortgage market and the economy in general, give me a follow